When it comes to investing into high quality real estate investment trusts or REITs, I've been talking about this for months now and I'll say it again. I personally think that time is slowly running out. You can see on September 18th, the next Fed meeting, that there's a large chance being priced in that we are going to see rate cuts, and going over the next year or so, it's probably going to be the case that rates are going to be much cheaper than where they are currently. Now, because of this, real estate investment trusts overall are going to see a massive amount of upside, even more than they already have so far. And although we're probably even a little bit late here, as you can see, the most recent low for V&Q, the Vanguard Real Estate Index Fund, was around $70 per share, where V&Q as of right now is basically trading at a fresh year high at over $91 per share. So because the fact that interest rates are going to be lower, or at least that's being priced in right now, real estate investment trusts are already seeing a ton of money inflow, and that's probably going to be the case for some time now. Now in this video specifically, we're going to go over 5 of my favorite real estate investment trusts that I personally think could still be offering a buying opportunity even right now, but I definitely think our time is running short and time is going to probably be up when it comes to September 18th, which is just around the corner. So if you want to go through these 5 different real estate investment trusts and see which ones I think are offering a buying opportunity, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. The very first real estate investment trust that I still think is offering a potential slight buying opportunity right now, and this is because this one is recovering nicely, but I'm talking about AMT or American Tower, one of my favorite real estate investment trusts across the entire market. Now, side note here, you are going to see AMT in pretty much all of the high quality real estate investment trust ETFs. There's a reason on why they own this one. AMT has a history, and this is because AMT has grown like crazy over time as a company, as a stock, but also this stock has paid dividends and paid more and more in dividends historically. Now, as of right now, AMT's starting yield is around 2.76%. Now, this is much lower than the 4% we could have locked in just a few months back, but still this 2.76% is much higher than the 5-year average of around 2.2%. So AMT, even though it's recovered a lot, is still offering a potential buying opportunity. Now, going over dividend safety, the dividend is relatively safe as a 78 on the safety score. The beta is relatively low, although I personally have watched the stock recover pretty quickly during different time frames. Now, like I said, the dividend growth for this one is honestly outstanding, around 19% dividend growth rate over the last 10 years. So even if you're getting a starting yield of around 2-3% with this one, it doesn't mean that you're not going to get paid more and more in cash flow over time, because keep in mind, just around 10 or so years ago, this ETF was paying investors shy of $2 per share per year, now well over $6 per share per year. So a triple over the last 10 years as far as cash flow goes is absolutely outstanding in my book. Now, AMT does have 11 years of uninterrupted dividends and 11 years of growth. So for those income dividend chasers out there, AMT is definitely one to look into. Like I said, this stock also over time, take a look at the chart. It has grown pretty quickly and dropped pretty quickly. So be ready when it comes to this one, but AMT is pure quality. Definitely look into it until it's too late. Another one of my favorites, another one of my holdings, I've held this one forever, is N REIT, which is currently officially yielding under 5%, which is very sad considering this one just a bit ago was yielding well north of 6%. And I'm very happy I grabbed some shares then. But the average yield is basically right where it is currently. Actually, this one's even recovered a little bit over that. But N REIT as a long-term investment is still always a good option for my portfolio because, of course, this REIT has paid consistent dividends and paid more and more in dividends over time, around 36 years without a reduction and 34 years of increases. Even though N doesn't raise their dividend the fastest across the entire market, it still does pay more and more to investors, slow and steady. This is one of those stocks in my portfolio I never worry about. It has a super safe dividend. Their tenants are bulletproof. N REIT is definitely one to look into. I have no idea why this one does not get as much love across the REIT community. It definitely deserves it. And speaking of quality, another super high quality one, which is no longer on the sale that it was a little bit ago, but still offering a potential long-term buying opportunity. I'm talking about Agree Realty, or ticker symbol ADC, which is currently yielding around 4.2%. Not horrible, not great, around 3.9% on the 5-year average. So this one is still offering a small buying opportunity, although like I said, just a few months back, this one was offering investors around a 5.5% yield. Now this is one that I personally deeply regret not buying more into. I have no idea what was stopping me. I guess I was spending a lot of my cash balance on Realty Income, which is understandable, but ADC was offering an amazing starting yield and so much upside with this one. This is probably the highest quality REIT, if you ask me at least, or one of the most high quality ones, as far as top tenants go across the entire market. Now, you of course didn't think I wasn't going to add in my favorite real estate investment trust. Of course, Realty Income is still offering a buying opportunity in my eyes, and I'm still buying it all the time. Realty Income's offering a 5.32% forward yield, which, keep in mind, not all that long ago, it was almost offering a 6.5–7% yield, which is absolutely insane. But still, Realty Income is offering almost 1% over the average 5-year yield. But as I've been saying, it wasn't going to take long, and it really hasn't taken long, till Realty Income is trading right at $60 per share again. The good old days might be over for a while, where Realty Income was easily obtainable in the low 50s or even the high 40s. We might have lost our last chance, honestly, which even I'm sad about. But because I own so much Realty Income at this point, it's not all that big of a deal. But I digress. Realty Income is still offering a long-term opportunity for long-term dividend investors, in my opinion. It has a super safe dividend. There definitely are some issues with some of their top tenants, but Realty Income, in my opinion, will be just fine long-term. Not to mention, Realty Income has been raising their dividends a lot as of recently. We had a massive dividend increase back in June, and hopefully we're going to receive another one very soon here. Realty Income has raised their dividend around 5% per year over the last 20 years and around 55 years of uninterrupted dividends, with Realty Income still yielding north of 5%. I personally think it could be an opportunity, at least one to watch and buy the dips. Now, the last REIT that's still offering a small buying opportunity, another one of my holdings, this one also was deeply on sale just a few months back with everything else. I'm talking about EXR, Extra Space Storage. Now, Extra Space Storage is now under a 4% forward yield, which is tiny compared to what we saw just a few months back, north of 6%. This one has recovered like crazy, just like I honestly thought it would. Extra Space Storage is still over the 5% average yield, but still not necessarily as good of a deal. There's not necessarily as much meat on the bone for this one. It still offers an 80 on the safety score for dividends. This is one of the highest quality self-storage REITs, and they're absolutely massive. The dividend growth for EXR in the last 10 years has been outstanding at 16% per year on average, so this one has the potential to pay you a lot more cash flow over time, although their most recent dividend increase was pretty disappointing because, like I said, I personally own quite a bit of EXR. But as far as dividends go, the dividend is going to be very safe for this one, relatively speaking, and they have consistently increased their dividends, so this could still be a potential buying opportunity when it comes to REITs before September 18th, that is. So those are 5 different real estate investment trusts that I have exposure to as of right now and or own on their own as of right now throughout my portfolio. Now, like I said, there's a good chance that we are going to get some rate cuts from here. How big are the rate cuts? How fast are they going to be? Well, your guess is as good as mine, but it does look like there's a big probability being priced in that by even September of this year that we are going to have a significant decrease from where interest rates are going to be compared to where they are. Now, because of this, we are seeing real estate investment trusts and index funds like V&Q absolutely pump, while the rest of the market is having some volatility and some issues. And even though it's not really rocket science, yes, REITs normally go up when interest rates go down. It's been a lot of fun to see, especially for those real estate investment trust holders like myself throughout the markets. But now lastly, most importantly, I have a question for you guys down below. Out of all the real estate investment trusts across the market as of right now, which REIT are you buying the most of as of right now? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.